Morning. How are you? Well, I guess we should get going. Although YouTube is telling me there's no data going through. No, now it's saying it's excellent data. Oh, good job. Hey, good morning. How are you? Welcome to Forex.Today, the YouTube community of almost 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky and not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Huh? Good. That was a thumbnail. Sweet. We'll do that, huh? Done. Great. All right. So everybody have a sip of coffee or tea? All right, before we get going, let me just point you to some resources that are going to be helpful to you. A foreign exchange broker that doesn't trade against you, tradersway.com. Been recommending them for, I think, 8 years. Get on the list for QuantBox. No, not QuantBox. Sorry, traders.co. I can't think and do other things. I was going to do a screenshot of something. Let me do a screenshot. Snip, snip, snip. Oh, well, there's yesterday's snip. Good enough. All right, there's yesterday's snip. That's what TRADARS is. Radars for traders. Tradars.co. You get it? You get it? I think you do. Anyways, that's coming up very, 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 very soon. I have more development meetings coming up on that. So anyways, traders.com. So if you want to know crypto or currencies, energies, and metals, even nat gas. If you want to trade NVIDIA, yep. Or how about the FTSE? Yep. Okay. So anyway, so it's looking at 7,500 charts, and it'll tell you the 5 things that you need to trade now. And the 50 things that are developing, huh? Cool stuff. Quantbox.co. Automate. Okay. Automate your macroeconomic research. These are the things you're interested in buying. These are the things you're interested in selling. These are the things you're neutral on. Here's the underlying intrinsic trend in the moment. Here are the other markets, so on and so forth. Very, very cool stuff. So there's no reason for you to trade amateur. You don't need to trade like an amateur anymore. You have pro tools for a very affordable price. Okay. Looking at the kitty cat yen, we'll just start here. We've been riding this trend for quite some time. Oh, let me get the drawing tool. Where did it go? There we go. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. And there's some potentially new up, 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 up. We have wicked a new higher high, so the next day or two should continue on our way to 112. Okay, I'm in at 108. We're at almost 112. So, you know, looks like if you add it all up, I'm about 333 pips into this. Yep. Cool. Nice. 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 Lots of things making higher highs. The number that you need to be watching very closely is 152. And we're at 150 again. There was another test last night. Okay. Up, 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 down, down, buy. Up, 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 up. Today's target is 150.70. And then followed by probably a roll reversal tomorrow. Back at 150.5, which is where we are now. And then a new high tomorrow. Getting up to this level, which is the first level of concern, which is 151. 152 is the mega concern. Micro concern, macro concern. Okay? So once again, this is the buy zone, bullish buying zone. It actually is labeled on the chart. And this is the target for today. And then tomorrow your entry would be about here, and that target would be about there. Up, 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 down, down, buy, up, 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 up. Yeah, boy! Once again, back is the incredible rhyme animal. Yeah, cool. Sorry, couldn't hold it. Couldn't hold it. All right, so let's move around the world. Let's take a look at dollar pairs. You're probably into the dollar, huh? You like the dollar? Oops, I clicked the wrong one. Here we go. Okay. Like the dollar. Let's see, where should we go? Where should we go? Well, we just covered that one, so we're done with that. Let's move this out to an hourly. And it's been down for several hours. And there you go for a roll reversal. What do you stink? What do you stink, guys? Around this 62, do we have some up on this? Let's back out, see where on the map we are. Okay, remember I trapped this for you. Okay, how do you trade a trap? If you don't know how to trap and break, you need to join investorbootcamp.com. Let me say it again. If you don't know how to trap and break, there's something wrong with you. Something seriously wrong with you. But I can fix you, right? I wish I could fix you. Look, it was a trap and break. Up, 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 down, down, buy. 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 Up, 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 maybe. But we also know the swing trade lives here and here. So, ish kaputya? Yeah, it could have a bigger down before we resume up, but we don't know that to be true. It says plausible, meaning something like this. If you are an Elliott waver, you're probably thinking three-wave correction. Okay, and so here's what a waver would think. Okay, 1, 2, 3, and then we game on next week. What do you stink? Smell like a plan? Jimmy Silva joined last night. Right on, man. Has my bias changed? Well, my bias is based on seasonality, for sure. But we're chasing the stock market, right, Frank? So, and it's not unusual for the stock market to be doing what it's doing. The fourth year of a 4-year political cycle. So, normally I'm buying dollar this time of year. There's no doubt about that. But there's also no doubt that the stock market's going up, and that's risk on dollar weakness. But, if you add up everything going on right now, there is no bias. There is no intrinsic underlying trend. So it's all fool's gold, right? Right? So when you look at VIX, dollar, yen, gold, that's an X, yield, oops, 1, 2, 3, 4, 5, oh, SB and the stock market, okay? When you look at these assets, they move in certain ways, typically, right? Typically, they move in certain ways with certain market conditions. And knowing that, so we call that correlation, you look at the basket and they might, generally say risk on. Market is bullish, for example, but you have to know the direction. So it's risk on. Or sometimes they do whatever they do, and instead they say risk off. So, for example, the stock market's falling, and volatility is rising, and the dollar is strong, and the yen is strong. You see? So they're like, ooh, the underlying intrinsic trend is risk off, or the underlying intrinsic trend is risk on. And right now there isn't even one. So we are definitely in a mixed market. There are mixed messages. There's like what should be happening, and then there is what is happening, and both of them are correct. So the issue is, has my bias changed on the dollar? Well, like everyone else is saying in the market, yes and no. Yes and no. So I am hedged, for example. So let's go back to the U.S. stocks. And based on NVIDIA yesterday, we had a strong green on the screen, and I will probably have to bail on my hedge for a small loss. And you're like, you lost money. Well, dude, when you hedge, you're guaranteed to lose money on one side of your trade. So like, yeah, I get it. So, but I may have to bail on that because today there's risk on, but it doesn't change the seasonality one iota, as I said yesterday. So all it tells me is this time of year, should I hedge to protect my long position or should I not hedge? And it says in certain situations you should hedge. And for me, I guess if I go into a smaller time frame, it did exist, and then NVIDIA, took care of that problem, right? And so somewhere around here, I probably need to bail. But it hasn't changed my bias. But I do trade reality, right? Not what I think. Do you remember Alonzo? It's not what you think. It's what you can prove. Well, by and large, Frank, I don't trade individual stocks. It's not how the Wayne do. How many people here daily or almost daily trade individual stocks? Anybody like Google, for example? Or Microsoft? I can give you a snippet. Oh, I did it again. All right. Oops, I did it again. I played with your heart. I have to grab this from the back office. Hang on. Look at that. What do you think of that? Is it pretty? Do you like it? Cool, right? Yeah. Oh, baby, baby. All right. Anywho. Yeah. Oh, very cool, Jim. Yeah, you actively use options. That's really cool. I knew you knew, but I didn't know that you play options that frequently. Yeah. You too, Jungie? That's really cool. All right, hang on. I need to bring up my email. I want the email. Where's my email? Cool. Anywho, I'll pull that up later, I guess. All right, anywho. Boop, boo, doo, doo, doo. So anyway, it's pretty amazing. I got to do something there. All right, let's roll. Oh, if I have my back office open, I should check the news. I don't think there's anything amazing going on right now, news-wise. All right. So what's going on in the world? Let me check. I'm looking out into the future. German IFO tomorrow at 4 a.m. And then that's it for the week. Monday, 6:30, we have Japanese inflation. Tuesday, we have durable goods out of the United States. That should be a market mover. So on Tuesday. And then Wednesday next week, we have GDP. Cool. Just looking at it, some pretty good probabilities on volatility on that. I'll have to start covering that in greater detail. Future short squeeze, yeah, maybe, huh? We can take a look at the Kiwi CAD. We can look at that. So we're kind of stuck in something like that, huh? Well, that's interesting, guys. I might be able to get you options setups through traders, tradars.co. Like, I wonder, because we had looked at it, and I wasn't sure how you guys felt about it, and I'm like, nice to know, but maybe not sort of something that we should prioritize. And I don't know if I have an example. I used to have plenty. I don't know where they are. What email would that be under? Come on, Wayne. I guess I have to back up and find. Do I have something I can show you? Yeah. Salesforce and options. Wonder if I can show this. No. I guess I could do a snip from the back office. Snip. Like this is something the AI did a couple of days ago. Okay. What do you think of that? It's cool, right? But it found it on Salesforce. So what it did was it said there's 10 ways to play Salesforce. And it broke it down, right? And it puts together quite a thought process on how to trade it. So again, I can go to the back office and you would look at the number 3 strategy it suggests you take a look at. And, it's drawing it out for you. Right? So then it gets a little more advanced. But I didn't think you guys would want your AI to tell you this stuff. So I'm like, nah. But it's possible, particularly if you're going to pay money for it. Right? Yeah. All right, going back. Kiwi CAD. Sorry, I was thinking pound CAD. Sorry, I was going back to Greg's. So let's go back. Kiwi CAD, Aussie CAD, Kiwi CAD. This one. Let's back out to see the old analysis. Interesting. So the way I've set this up, okay, do you remember? We're like, if it was going to go back to the upside, we'd want to see this bottom out, okay, which it did. Okay, then we have a trap, right? So then you move into the trap and break, which it did. And if you were going to be long on this change of direction, notice it's a breakout type trade. And the 618 predicts a 1382, which is actually up here. But Gregor said short. The market is short. So you're saying they're going to take it off this top and do a reverse like that? Huh. I wonder if they're going to be wrong where the stops are if it creates a pop. So I guess what you're saying is the market is positioned off of this roll reversal. Okay, that'd be interesting to see. Jeremy Silver says, "Isn't that amazing?" Yeah, it's cool, right? So for that one trade, which was Salesforce, it gave like 10 different options plays and then outlined them by risk and complexity. Yeah, well, so like but the issue, Jim, is that it's always just money. Like there's capability, but it's always just money. Like it's just money. That's our limitation. It's just money. Yeah, I like money. Yeah. So it's like every time we turn something on, let's say I need 100 paying customers to justify the cost, right? Kind of thing. So anyway, so there we go. Gregor says the market is heavily short this, and yet I understand the role reversal play, but on the short run, which is funny because this is a daily chart, there's still plenty of up. So I wouldn't take this to the south side until there's a break. So once again, you do a trap and break strategy. So that's like the third trap and break. Yeah. So anyways, guys, put your name on the list at traders.co. Would you please do that? Because I'll ask you, I'm like, if you want options, we can start, I don't know, start a campaign, let's say, to find other people that also want options, and I can get it done for you. I just need to know, is it worth the money? Is it worth the time and money, right? So again, I'm going to start asking you guys probably next week things like, what price do you think this should be? Or more like, what price are you willing to pay? And then I can figure out how much money I'm going to lose. But of course, over time, it should work out fine, right? We'll just spread our cost over time. And if you're like, dude, I totally want that, options play, then we can put it on the to-do list. And then we just have to figure out, well, great, we want to do it. So how are we going to pay for it? Right? So anyways, put your name on the list. Really, help me build the perfect service for you. I like money, coffee, and cats. I like cats drinking coffee. Dogs playing poker. Right? Yeah. Anywho, so now we're at the 8:30 hour. Got maybe that trapped and braked, trapped. USD kitty cat down to the bottom part of its range. Let's go around a little bit. Let's look at our commodities. Okay. It's been several days now. 1, 2, 3, 4, 5, 6, 7 days after the lower low. But we have 1, 2, 3 days now without a real body. Well, I guess you can count those as higher highs, but it's not really making higher highs, is it? I mean, really? Or can we call that toppish? Okay, so now if I was a bear, again, another kind of trap and break strategy where I would say, let's count this as a bottom, let's count that as a top. And what's informative to me now is if it does one of these, then it's game on, okay, to the downside. If it does one of these, then it's probably going to continue to drift up a little bit. And we've just stagnated here for 3 days. But are we stagnating here for 3 days because it wants to capitulate and roll back over and head back toward 2000? Well, that's what we're trying to do, right? Yeah, Greg. Yeah, that makes sense. I could. Okay. Let me open up. Mm-hmm. So, I would mix that with some seasonality, of course, huh? So if it's heavy, when does it tend to roll over? And you can be prepared. Okay. So we're stuck in the middle here. And so I would set up the trap and break and then wait. Okay. Trap and break. So now we wait. So you were talking about Kiwi CAD, huh? So let's take a look what I have. So there might just be different data sets. But I have Kiwi CAD 75% short, but you're saying it's now 96 on a different measure. Now, this is being pulled by quite a few different liquidity providers. So But that's the news. So I don't have it quite that heavy, but okay. I'm not saying your data is wrong, just different data set. Good profit taking. Look at that. Beautiful profit taking on that euro. Okay. So we're really fighting here. This is a battle between the bulls and the bears. The bears sold precisely where they should sell. And the bulls bought, quite precisely, I would say, where they would buy. And now we wait. Who's going to win? I don't know. Good question. Okay. The bearish projection is 103. The bullish projection is 116. So which one is it going to be? Well, I would suggest you pick one. Okay. I mean, what do you think? Are you thinking up or are you thinking down on this play? Is this going to make a higher high by the end of the year? What are your thoughts? Oops, hang on. I lost my chat. I don't know where the chat went. Where'd my chat go? I don't have YouTube chat. I've become so numb. All right, I lost my YouTube chat. Where would the YouTube chat go? Where did you go, YouTube? How funny. All right, well, I'll log back into Forex.Today. Where in the heck did it go? Huh. I guess it's just gone. All right, so let me log back into Forex.Today. How funny. View accounts. I'm in the proper account. Great. Create. Go live. All right, fine. But I'm already live, so then I click on that. Oh, there you are. Where did you go? Okay. Yeah. Hey, Jiver Me Silver. Yeah, I answered that question in January for $4.44. Yeah. So, right? I'd like to tell you, but. All right, I'd like to tell you, but. Yep, that's a big but. Is that right? Everybody's on all-time highs, huh? All-time highs. It's cool. Let's go take a look at some of those. Okay, so here's Hong Kong. So I've been in Hong Kong now a week. Yeah, I guess a week ago. I bought Hong Kong. So we're at to the next level. That's nice. And we're hitting swing trade target, right? Just about 17K. And I'm in at 16K. So that's cool. That's a good week. And so in the swing trading group, if you want me to cover this one, we could do it tomorrow. Jiffer Measles, they have $4. Venmo. Okay, so anywho, kind of interesting, huh? We'll see where it goes. Remember, it all started on the double bottom. This is my second attempt to catch this. Now, when I zoom in, the real battle here is now with the weekly 21. Okay, but that could push us down, let's say, a day or two, and we pick it up over here next week. But I'll leave that for the swing trading group. Most people here are in the swing trading group. So I'll see you guys at 4 for that. Jivert, did you join the swing trading group? So when it comes to the Japanese stock market, this 39,364 is the extreme bullish target for the year. And it's February. Wow, that's great. Now we get into a dangerous zone, but if we're going to use last year as any indication, we are on our way to R3, which is 44,635. So why don't we just call it 45K? Okay. All right. So on our way to 45K, and then what? Yeah, then what? Good question. Why, thank you. Notice like it trades just like I teach you. Okay, higher high, higher low. It's a simple roll reversal. Then it makes a new higher high. Grab this, drag it across, roll reversal. Now it's not perfect, but you had a shot. Then it makes a new higher high. So you drag that across, higher low, roll reversal. Then it makes a new higher high. Then you drag this across. Higher low, roll reversal. And so now we've made a higher high. At some point, you'll probably be buying this back, but way down there. Whoa, what? Yeah, well, sometimes, look, it tops out in, let's call it June, and you buy it back in November. But I've been teaching that for 100 frickin' years. Okay? So that's normal. Yeah. So what do you think? Up until June and go away? Sell in May and go away? Could be a rabbit, could be. Sorry, catching up with the development team. Yeah, well, there you go, Luis. You're making wise investment decisions, right? A little bit of dent, dent, and a little bit of dun, dun. Yeah. Well, congratulations. Well, without a doubt, right? Yeah. So that's kind of interesting. Let's go look at the U.S. stock markets. Again, heavily influenced by the NVIDIA news yesterday. Is that right, Dakar? Good for you. Yeah, we'll see if Dow, remember, Dow is the least tech heavy. Okay. And we are still on that resistance. We've been there all year. Well, actually, all month. Resistance, 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 resistance. And here we are again. Dow challenging that. Oh, what did I do? Now I killed the whole... No, did I? I must have. Hang on, let me get the MD4. Okay. Okay, that's interesting, right? So S&P 500, a little more tech heavy. Remember, this is a combination of growth and value. And there's some bullishness. Yeah, I'm heavily long. My only concern is I short-term hedged, and today I might have to remove that hedge. What just happened? Did I lose you guys? What is this? Why did it switch over here? Something's going buggy, man. Something's going buggy. Something's going buzzy. I didn't do that. I don't think I did. Anywho. Gee whiz. Maybe it's time to go. Cut my losses. I apologize, everybody. I'm having one of those days, eh? Gee whiz. And now let's go over here. Yeah, something up. Okay. And what do you think? Was this impacted by NVIDIA yesterday? Yeah, apparently so. Okay. On the 4-hour 200 EMA, which is the neutral zone, that's the neutral price. And now we're back 2 standard deviations above the mean, but there's still potential, I don't know, reality like, okay, NVIDIA's red hot, but maybe that's that. It did what it did. Who knows? Okay, we're still there. That still exists. It's obviously got a negative slope. The rise over the run is negative. But you see what my chart is also showing is the ultra long. See? 2 standard deviations, 1 standard deviation. That's up. I also have it here. Okay. So the neutral was basically oversold because now the average, let me make the average a little thicker. The average is in here somewhere, right? So if you're really truly long-term long, okay, kicking off of there made sense. But now we're in this situation where it'll matter. So if you're bears, right? If you're a bear, this price gets interesting and this price gets interesting. If you're a bear, because you could argue the next move is down in the shorter run, or the bigger one is a double top. And you could argue things like the breadth of this is very narrow, so on and so forth, seasonality, blah, 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 blah. Also, the end of earnings season. So one of the things I said earlier today at QuantBox, and remember, QuantBox, you can get the delayed videos for free. But in QuantBox, I talked about this idea, like if earnings season is over, what's the next catalyst to buy anything now? What's the catalyst? Now you want to buy NVIDIA. You didn't like it yesterday. You didn't like it last week. You didn't like it last month. You didn't like it last year. But now you like it. Really? So you're going to buy it way up here now after that giant move? And so anyways, my point is, if new money isn't coming in, and instead old money is cashing out and selling profitable positions to traders that are clearly chasing tails, then that's smart money dumping on top of dumb money. And then there's no follow-on to that. So now the dumb money is going to be quick to take a loss. And then all of a sudden, everything is coming down for a while because, well, all the smart money got up because they're smart. You see what I mean? So let's say with NVIDIA, okay, NVIDIA, is that it? Okay. Let's say with NVIDIA, in the next, let's say in the next 10 days, 20% of the stock, the capital of stock, exchanges hands. Okay, these sell at the current price, these buy at the current price, so generally speaking, the price doesn't really change. But these guys have been in it for, if they were in it for 1 year, do you understand they're up 300%? And these people are buying after the 300% move, after the 15% move yesterday. Now they want to buy. So these sell and the price doesn't change. But these guys get their money, and now their money is in the bank, and then in exchange, they give them their position. Okay? Then what? No new money comes in because all the old money, okay, is gone. And now what? A 10% drop in NVIDIA because no new money is coming in, so some people take profit, a little more people take profit, a little more people take profit, and then all these guys, the 20% of people that just bought it, now are all going to capitulate. They're going to get their stops hit, and NVIDIA now has a 25% drop. And it's not because of the smart money getting out, it's because of the dumb money. And what does the smart money do? Buy it back 25% cheaper. And the world goes on. The rich get rich, and the poor get poor. It's harsh, but you know it's true, right? Girl, you know it's true. I love you. Right? Girl, you know it's true. Ooh, ooh, ooh. Yeah. So, anyways. What side of the equation are you on? Dumb money or smart money? Well, how much have you planned? I don't trade individual stocks. I own the beta. I own every stock in America that is not a small cap. I own value. I own growth. Small caps, too risky. International, too risky. All NASDAQ, too risky. All Dow, too risky. S&P 500, balanced. But I need some upside, but I don't want to take on risk. So, right? So now I manage 3 endowments plus my pension, and I would not buy NVIDIA, but I would buy the NASDAQ. I don't want to put all my eggs in one basket. There's risk. That's a form of risk. But I do want some growth, so that I have a balanced portfolio and I have diversification. Okay? Now I have an account where I could easily buy stock, but I don't do that no more. Also, being an old venture capitalist, I never really was interested in individual stocks, but I'd be interested, like if I was buying individual stocks, I'd probably would have looked at Palo Alto in the last couple of days. Let's see, Palo Alto. I probably would have looked at this. Okay, software security, there's always going to be a business for that because, well, you know what? The world's dangerous. Cool. So a week ago it was $375, and now you can buy it for $260. So it went from 370, let's say 360 to 260. Okay, down 10% for the year, but down 24% for the month. Down 29% for the week. So I would probably carefully look at this, analyze it, and see if it's worth buying. And if so, at what price? Okay, it's not a recommendation. It would be something that I analyze. So Traders, though, does technical analysis on many of the biggest ones. So I don't know if it does Palo Alto, but I have to look. But traders.co does technical analysis on individual stocks. Yeah. I mean, we have the data set. That's the thing. Like, I was talking with the developers about it. I'm like, you know what? I don't really think I need that. And they're like, well, we have the data. We just run the AI over it. Like, we have the data. All we have to do is, I'm like, oh, well, sure, let's do it. But with options, that's a whole new thing because now you need, again, that data's got to come from a different data provider, and then you have to teach it like iron condors. How would you do an iron condor on this? And would you? And what's the quality of that strategy on this asset now? Well, again, that's a whole different model, isn't it? Okay. So anyways, so yeah. This is going to be an interesting day. I'm definitely going to be watching the stock market today. What do you think? Okay. Aussie dollar. Big move off the top. That's definitely risk off. So if stuff like this is happening, then I'm like, well, maybe I don't remove my hedge. But the market hasn't opened. So I might, on the opposite, if the market opens strong today and continues to have a stock market bullish day, then I kill my hedge and then I buy this dip. Okay. I could. This is what I might be doing in the next hour. What a horrible noise, huh? Richard's like, that's a good play for the future. Yeah, well, that's the thing. So if he can pick up a good company at a discount, as long as there's intrinsic value, okay, aka true value, you buy it. You do not buy a stock because it's cheap. Okay? One of the dumbest things you can do is shop at the dollar store. I like to do that once in a while. Maybe twice a year I go into the dollar store. And it's interesting because you look at it and they do things like they make the packages smaller. And you're like, oh my God, it's only $1. You're actually paying more. You're paying more per ounce. than just buying the regular one. So on absolute terms, you're like, wow, this is only $1. It's cheap. But on relative terms, you're paying too much. You're losing money. You're getting less value. It's cheaper, but you're buying crap. Or you're buying something smaller. So you're actually paying more. So there's value destruction. Okay? Instead, maybe you buy, right? So you don't buy any company just because it's cheap. Because there might be something wrong at the company. Bad management, for example. Better competition. Okay? So that's why I said, Richard, I'd be analyzing Palo Alto if I was a single stock trader and I was going to build a portfolio of individual stocks. I would look at it and say, cybersecurity. Is there future business in cybersecurity? And I'm like, yeah, as far as I can tell. Okay, so then you have to ask, why did it get clobbered? What's going on here? Is it management? Is it competition? Is it product failure? Research and development failure? Is there like government intervention? So like with NVIDIA, the government said, you can't sell this stuff to China. That was actually a negative part of the report yesterday. So you're like, okay, there's all kinds of risk. And you're like, so why did everyone just dump it? Well, maybe they bought it recently from someone else that has already taken profit because they already expected whatever was going to happen. So they sell their position up 100%, let's say. So someone else has already doubled their money. And then they saw the risk approaching, so they sold it to somebody who would just buy anything because that's who they are. So they sell it off to them, and then 3 weeks later, boom, there's a big 25% crash. Well, obviously, people just got stopped out. But why were their stops so close? Well, they probably just bought it from someone that was in it for 3 years or longer. Okay? So great. And so now it's down 25%. Now, if there's truly intrinsic value and it really is a good company, and now it's down 25% in a week, well, maybe the smart money buys it back. And we rinse and repeat the cycle. So I might be that guy that says, you know what? I'm buying it back 25% cheaper because I'm smart money. But that means I have to stop and analyze and do thought. Actually, right? Think about it. Beyond like, what does Jim Cramer think? Okay. Great. Cool. How are you guys doing? You guys feeling good? I really like what we do, by the way. I just want to thank you for being part of this community. You know, we've been doing this every day, day after day after day for decades. You know, it's good. Yeah. My shoulders are sore, and my hip is sore, and my wrist, even my pointy fingers are sore. My forearms are sore. But, you know, I'm happy. Yeah, I'm feeling good. Feeling good, Lewis. If you remember the end of Trading Spaces. Yeah. Yeah. Yeah, it's good to have community for sure. So I need to go soon because I need to watch what the market is going to do today. And like I said, if the S&P 500 goes up, I kill my hedge and I buy the cash Aussie dollar. And if NVIDIA has sort of a pop and drop, okay, we call that a front run. Futures are way up. So all the dumb money jumps in to buy NVIDIA, and then the smart money just dumps on top of them. So that it's a pump and dump. So by the way, if you don't know a pump and dump, okay, it wouldn't be this. So let me move this over to the S&P 500. Here's what a hedge fund does. Let's do this. Here's what a hedge fund does. With the pump and dump, you go to the futures market. So this is cash. So you go to the futures market, which is leveraged 40 to 1. Okay? So 1 million helps you control 40 million. 10 million helps you control, right? You see? 400 million, you're like, whoa, what? Okay? And what you do is you want to sell your NVIDIA stock, but you don't want NVIDIA to fall. It's up 14%. You're like, man, I hope it goes up 20%. But your intent today is sell your NVIDIA. But if you sell too much, you push the price down and you're shooting yourself in your foot. You understand? So what you do is you bet on dumb money doing dumb things. Okay. So you go to the futures market and you pump it up using leverage. So you might buy $400 million worth of S&P 500 or whatever, right? And then CNBC and Bloomberg and everybody else, they're like, oh my God, futures are pointing to a huge open, more than 2.5% to the upside. That must be because of NVIDIA. NVIDIA is going to take over the world, right? They just pump it up. And suddenly every overly egotistic dentist and lawyer and who else should I pick on? Chiropractor. They all decide now is the good time to buy NVIDIA. Now that it's up 15% overnight and 300% for the year. But hey, man, CNBC is hyping it up. Right? Once again, they're like, futures are pointing to a hot open, maybe as much as 3%. It must be NVIDIA. It must be NVIDIA. It must be NVIDIA. Meanwhile, smart money, some of it may have not got out yesterday. Uh-oh. So now they're like, dude, on the open, we need to dump this stock for massive profit. But we can't take the market down. So we'll go to the futures, we'll pump it up, we'll get CNBC hyping it, we'll get Bloomberg hyping it. Everyone is talking AI. Great. And then ding, 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 ding. And the market goes crazy and everyone is buying. And meanwhile, the smart money is selling into the feeding frenzy. It's like chum attracting all the sharks, right? And you're dumping your stock on the feeding frenzy until what? You sell enough stock to push the price starts to fall because there's more sellers than there are buyers. So you want to create the buyers in the beginning and everyone's buying and you're like, sell, 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 sell. And then finally you sold off all you could and the price stops going up and it starts coming down. You're out. You dumped as much as you could onto the dumb money and you went to cash. And now they're going to hold it as it drops. Cool, let it drop. 5%, 10%, 15%. Like Palo Alto, maybe 20, maybe 30, maybe 40. And then you buy it back cheap. Where did all the money go? So there's market to create a feeding frenzy at the open, and then you sell into the feeding frenzy until you've sold too much, and then you drop, and you're like, well, we got to cash on as much as we possibly could. Oh, well, here's the thing, Stingray. Okay, they pushed it up, right? And the market opened up. So they take profit now on their cash position, on the futures position, and meanwhile they're dumping their cash position, which they're also long. So they're long futures, and they're long the cash market, right? Because they own the stock. So then on the open, they sell the future and they sell as much of the cash as they can until they hit that equilibrium point in which they're selling is lowering the price. And so they unloaded 5, 10, 15, 20% of their position. And now they've made money on the futures. They made money on the cash. And all the dumb money lost because they're dogs chasing their tails. And that's how the market works. I don't have a problem with that at all. Okay? Yeah. Isn't that spoofing? I have no problem with it. I have no problem with it. It's not illegal to do dumb things with your money. It's not illegal to lose money in the stock market. If you wake up in the morning, you're like, I guess I should buy Nvidia now because it's in the news. Gee whiz. Well, you know what? What are you going to do? There's always going to be smart money. There's always going to be dumb money. The thing is, you have a choice. If you watch the presentation I did about QuantBox, I said you have a choice. You make a choice. Which one do you want to be? You want to follow the guy on CNBC, or you want to listen to some kid on YouTube? And that's where you get your financial advice? Then you've made a choice. Or you could take responsibility for your financial future and you actually do the work. You don't do the work, I have no sympathy. Look, I lack empathy. I had my empathy amputated as a child. I don't know what went wrong. So if you just jump in, want to get rich quick, throw your money at some stock trading tip, you know what? That's been going on for 1,000 years. But if you'd rather be mature about your investment and trading decisions, and they're thoughtful, informed decisions, then I hope you're successful. I'm all for you. I'm with you, baby. Even if I disagree with what you're doing, I want you to succeed. I cheer for you. It's the message I've been doing for 20 years. But that makes me unpopular on YouTube. I'm okay with that. Okay. How do you keep up with the news? Like, is there some place to store news articles? I don't read news articles, Richard. I don't. I haven't read a news article in forever. And that's not even a joke. I haven't read a news article. I can't remember the last time I read a news article. I saw one the other day about a 100-pound cat. That was pretty good. But I get my news from the central banks and from the government agencies, Richard. And I read that every Tuesday with the group. So like this Tuesday coming up, we are going to read word for word the meeting minutes from the Federal Reserve Open Market Committee. And we'll actually read, and we'll actually know what they said and what they are talking about. We'll know their thought process. And one of the things we always look for is sound bites. Things that would stick out. If you were going to be the expert on Bloomberg and CNBC, and they were going to interview you, and they're like, what do you think about the Aussie dollar? We actually highlight things like, ooh, this would be your soundbite. This is the thing. Okay, the headline says this, but there in the report, we found some other underlying tidbit of information that nobody's talking about. And we think this is interesting. So I interpret the news myself, yes. So that's why I went to Harvard for 5 years and got a bachelor's degree in macroeconomics and a master's degree in financial management so that I can interpret the news even better. I am willing to do anything to improve my abilities as a trader and as an investor even 1%. I will do whatever it takes. I'll go to extraordinary lengths to try to improve. Okay? Harvard wasn't easy. Harvard wasn't cheap. It doesn't matter to me. There is a massive return on investment. Yep. Right on, Darko. So, hey, I got to go. The market's going to go up. It's going to open. So, look, I just want to, give you some bromance. I love you, babe. I want you to succeed. I'm here every day. Whatever you need, whatever it takes, let me know. We can tackle it together. Okay? I want you to know that. Whatever it takes, we have each other. Peace on earth. May the pips be with you. May your profits be above average. If you're in the swing trading group or day trading group at investorbootcamp.com, I will see you at 4 p.m. to plan out all of next week.